What's up, traders? So today I'm going to show you a stock which, looking at the data, may have bottomed out and may be ready for a nice long bull run. Or at least that's what a few large hedge funds think. But I'm going to show you the perfect trade in order to make money off of this data. But if you're new to the channel, my name is Rashad. I am a full-time options trader. I bring in multiple six figures a year trading options, and I use the premiums I make from options in order to pay for my entire lifestyle. But enough about me, let's get down to business. So the stock I am referring to is Genuine Parts Company, ticker symbol GPC. So their business summary is Genuine Parts distributes automotive and industrial replacement parts and materials. So essentially they make a bunch of car parts. And I do believe that this is the company that owns Napa Auto Parts. So looking further into it, they have a market cap of $15.9 billion. And they have a dividend of 3.46%. But every day I always check for unusual stock options activity because that is a good way to see what large hedge funds are buying or selling on that given day. So that is exactly what I did. So you can see here, unusual options activity identifies options contracts that are trading at a higher volume relative to the contract's open interest. Unusual options can provide insight on what smart money, which is typically hedge funds, are doing with large volume orders, signaling new positions and potentially a big move in the security. All right, now you can see from this search, GPC is number one. So the stock price is currently $118, and there are a large amount of contracts trading at this $115 put for the December 2024 expiration date, which is 53 days out from now. Now you can see here the open interest. So there were 160 contracts open at the start of this date. And at some point today, if we look at the volume, there was 22,616 contracts traded today. So there is some type of news, there's some type of event, there's some type of insight data that caused people with a lot of money to want to trade this stock at this time. And so once I saw that, I started to dig in a little deeper and I went to look at the trades. And we can see here, and this is just for the trades for today, but we can see that the net trade sentiment for this stock is a plus $7.2 million. There was about $79,000 traded for bearish trades, but there was 7.2 million traded for bullish trades just today. And if we look down here, we can see it right here. So it is the $115 strike put. And it looks like this trader received $3.20 per contract, which would be $320 per contract, and they traded 22,600 contracts, receiving $7.2 million. So once I seen this information, the next thing I wanted to do was go and look at the chart. So here we are at the chart. This is the chart within the last year, but we can see here that there was a huge gap down. It looks like this was just last week. Let's see. This was October 22nd, 2024. So it dropped dramatically just last week. And it looks like it might start working its way back up. As we can see, it's up 3.5% just today. Now, knowing that earnings season just kicked off, my assumption was that they had bad earnings, or even more likely, it was an overreaction to earnings, which happens quite a bit. So I did some research to find out the reason for the dramatic drop, and I was correct. But wait. What if you can make money while on vacation, while spending time with your family without constantly worrying about bills? What if you can make the money for your entire vacation while on vacation? I personally trade options full-time and generate multiple six figures per year, enough to comfortably provide for my wife and 6 kids, and our multiple vacations per year. In Trade to Freedom, I'll show you how to create passive income streams that keep paying even when you're not working. You'll get my exact trades as soon as I answer them. Imagine being able to take that trip you've always been dreaming of, knowing that your money is still working for you. The link is in the description below. I'll see you in the community. This article by Motley Fool, which is why genuine parts stock investors saw red this week, says shares fell hard this week after the global automotive and industrial parts giant reported some discouraging news about its short-term operating trends. The stock fell 20% through early Thursday trading, according to S&P Global. That performance gap was due to Genuine Parts Q3 earnings update, which showed surprisingly weak sales and profit trends. Executives said in the October 22nd press release that sales landed at $6 billion for the selling period that ran through late September. That result was good enough for a 2.5% increase year over year. However, backing out the impact of recent acquisitions and an additional selling day in the period compared to last year, the sales in fact fell in both its industrial and automotive parts divisions. Management blamed weaker demand for the shortfall. Genuine Parts is facing two main demand challenges. The biggest is that industrial production activity is lagging in the core US market, more than offsetting rising demand in the outside markets. Second, sales fell slightly for replacement automotive parts. Okay, so just to sum it up, their quarter was not that great. And however, I know that because interest rates have been so high for so long, car companies for quite some time were selling slightly less cars. However, now that interest rates are starting to decrease, we have seen some recent uptrends as far as car sales. So I do believe that this company's sales will rebound in the near-term future. Because let's be real here, cars aren't going anywhere anytime soon. And if we look at the data on their financials, we can see that the year ending December 2019, which was 5 years ago, they had $19 billion in sales. And then the year ending December 2023, they had $23 billion in sales. So their business looks to be trending in a good direction when it comes to the long term. However, quarter to quarter in the short term, it's always a toss up with any company. Now, if we hop over to the analyst target prices, we can see that out of 9 analysts covering the stock, they currently have it as a moderate buy. But look here, so the stock price is currently $118. Analysts have it as a high of $165, a mean target of $132, and a low target of $120. So it is currently trading below the analyst's low target. So now that we have all of that data, well, how would we trade it? Now let's head over to the options chain. Let's just stick with the exact same expiration that the hedge fund selected. So December 20th, which is 53 days out from now. And I'm going to scroll down, and what I'm going to do personally is I'm going to probably sell puts at the $115 strike, just like the hedge funds did. So remember, when you sell a put, you are agreeing to buy that stock at that price if the stock price drops below your strike price by the expiration date. So by selling this $115 put, I am agreeing to buy GPC at $115 if the stock price is below that on the expiration date. But for doing so, we can look here, I will receive about $298 per contract for selling these puts. Now, when you sell a put, you are agreeing to buy 100 shares of the company per contract. So at this $115 strike, I would be agreeing to buy $11,500 of GPC if the price were to drop. Now, what if you're not comfortable with buying that much of the company, or your account just isn't large enough in order to do that trade? Well, you could just simply turn it into a credit spread. So with a credit spread, what I could do is sell to open the $115 put and then buy to open, let's say, the $105 put. Now, by doing this, I only need $1,000 in my account in order to make that trade, because there is a $10 difference between $115 and $105, and then times by 10, that is $1,000 that you are putting at risk for selling that credit spread. And when you open that trade, you'll immediately receive the $315 from the $115 strike, and then you'll have to pay out the $95 from the $105 strike. And so you make the difference, which would be $220. And with all the data that we've looked at, I still think that that is an amazing trade. And apparently whatever hedge fund just put $7.2 million on this trade also thinks that as well. Well, guys, that's it for this video. If you'd like to see my exact trades when I enter them and get my total options framework, please join the Trade to Freedom community. The link is in the description below. But if not, I'll see you guys in the next video. Peace.